Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for July 12th, 2018. So last night we were looking at yesterday afternoon when the market closed, it just looked like ugliness going on. The bears were in control. They were pushing down. The diamonds came very, very close. We tested this level of support right down here, and you can see that's a price support that comes off of this little consolidation over here. And we were also pushing right down there to that 50-day moving average, the 34 exponential moving average, all of those providing a little bit of support right there. And it looked like we had a chance of those breaking. But shortly after the market closed, futures started to show signs of improvement, and those futures started to pick up overnight. Asian markets, European markets were all higher last night, and we're seeing a big gap up this morning. Currently, the Dow futures are pointing to more than a 150-point gap up, just a complete overnight reversal. So what does that mean for us? Well, it means that we're getting a nice relief to that selling, which looked like had a really good chance of pushing lower today. Now, this big whip up to the upside, we always want to be really careful not to chase big gaps like this. You chase into a big gap. Big gaps tend to invite the possibility of whipsaw price action. And remember, we saw a lot of that where we gap up early in the morning here on these candles right in here. We gap up early in the morning only to have that come all the way back, do the same thing here, or obviously the whipsaw can go the other direction. Well, the big gaps set up or even invite that kind of price action to occur. So be careful not to chase first thing this morning. What we want to see is after that morning pop that buyers are actually stepping up, that we see buying coming in to support that price and hold that gap. We don't want to see that reverse all the way back down. So be careful not to chase this morning. But that's a nice relief to see such a big move overnight here in the markets. Now, we also have to keep in mind that we have a resistance level here that we have to deal with. So even though we've popped off of here, we're not out of the woods here yet. We've got a lot of work to do. There also seems to be a tremendous amount of anticipation of third quarter earnings. I've been seeing report after report that folks are expecting big numbers out of the banks, are expecting big numbers out of the tech sector, big numbers in the oil sector. And they may be true, but there's an awful lot of energy seemingly built up on these potential earnings. Keep in mind that tomorrow is the official kickoff to third quarter earnings season with Citibank, JP Morgan, Pinnacle Financial, and Wells Fargo all reporting prior to the market open. So if they do report well, if the bulls hold on to this gap today, we could see a nice finish to the week if they were to report well and we get a good reaction from the market. So keep that in mind as we move forward. Now, of course, we always have to think of the other side. What if the bulls can't hold on to this gap today? What if the banks report poorly? Well, with so much anticipation in good earnings, a group of bad earnings could really be rough on the market. So please consider those when you plan your risk for the days ahead. We could see some pretty whippy price action, and you don't want to be overly long or overly short and caught in the middle of that if that anticipation happens to turn out to be incorrect. Let's take a look at the SPY. SPY also receiving a nice gap up this morning, moving higher. Once again, we have to remember that we're below some fairly significant resistance levels that we still have to deal with here in the market, but it is nice to see that relief coming off of that level. So that's a good sign for us, at least at the moment. The Qs also getting a nice bounce up this morning. Remember, we have an all-time high that we need to test here. So we have a triple top right here at the moment that we need to be able to break through. It's going to take some significant energy to do that. I don't know if today's going to have enough follow through to make that happen or not, but at least it's nice to see that we're moving up. Just remember that we could run into a great big wall of bears up here that want to only sell and push this market back down. So watch for that whipsaw today. The possibility does exist. Let's take a look at IWM. The Russell pulling back pretty sharply yesterday, closing on its lows, but holding this support by the close, and obviously still well above its 50-day moving average. The Russell is also experiencing a little bit of a gap up this morning, but not as much as the other indexes. So kind of keep an eye on that. The Russell has at times kind of been a nice leading indicator for the market, but that it sometimes loses its direction as well. And if the overall market's going to pick back up, we want to see IWM moving with it. Let's take a look at the VIX real quick. Now the VIX moved up sharply yesterday on that selling. A little bit of fear coming into the market, but here's the good thing: is it didn't get crazy wild. The fear didn't really spike like we sometimes see in the VIX, where we get these really ugly spike moves. If that fear really creeping in, so all we saw is a modest move here on the VIX. And now with this gap up this morning, we could see that drop right back down into here. And that's a good sign that we're, at least at this point, we're holding on to this major level right in here as resistance. So any push back down, we'll watch this long-term downtrend line maybe be tested as support. So good signs for us, and that's actually going to help us out for any option traders. That implied volatility coming back down cheapens up those options a little bit. Let's take a look at T21.22. T21.22, 4-week, new high, new low ratio. We had an amazing pullback in that 4-week new high, new low ratio yesterday. Big whip to the downside, right back down here to the middle. Notice we're right here about 50%. Now this gap up this morning could whip us right back up here. So we'll have to watch that kind of close. We could go from, that good zone right back into that bearish reversal zone really fast. But what's nice here is this pullback is actually affording us the opportunity to go higher, where we were kind of running out of that opportunity up here. This gives us that opportunity to move higher. But also keep in mind that, we're in the mid zone here. Not only can we go up, we can go down. So watch that close if we happen to get that whipsaw price action. And whipsaws are just plain nasty, mean price action, because what happens is we get all wound up in the morning. We get caught up in the news, and we get that fear of missing out. Oh my goodness, I'm going to miss out on this move. So we chase into a gap. And it can just be a brutal reminder if we get that whipsaw, sellers picking up after that morning gap, and it pushes right back down to where it started. So hopefully that doesn't occur here, but big gaps like this do invite that to potentially happen. So be careful not to chase today. Let's take a look at the earnings calendar, the economic calendar. The economic calendar, we have a couple things this morning that could move the market around just prior to the market open. We have the CPI coming out. CPI is expected to increase. We're looking at a number of around 2.8, 2.9, somewhere in that CPI. CPI. So kind of keep an eye on that. And a little bit of inflationary pressure, but not a lot, which is nice to see. We're not getting massive inflationary pressure. Jobless claims are expected to decline this week. They popped up a little bit last week, and looks like they're pulling back this week as that labor demand remains very, very strong. We have lots of other stuff on the calendar today. I wouldn't expect much of anything to move the market around, except maybe the 2 p.m. Treasury budget, which is expected to show pretty wide monthly monthly budget deficit of I want to say it's around $90 billion on a monthly basis. So that could move the market around a little bit. Have a couple Fed speakers on the calendar today, and a bunch of bond announcements and a few other outside reports that are unlikely to move the market. But keep an eye on those reports as they come out this morning. Could really move the market around. Let's also take a peek at the earnings this morning. We have about 19 companies reporting earnings today. Nothing that I would really expect to be majorly market moving, but we do want to make sure that we're paying attention to earnings, especially those companies that we're thinking about buying or those that we hold. One of them, probably one of the most notable this morning, would be Delta Airlines. Looks like they may have reported a slightly positive report, looking at a little bit of a gap up this morning on Delta. So everyone, always stay focused on those earnings reports. With that, everyone, hey, I want to wish you all an awesome day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. Also, always feel free to share these videos with any friends or family. You guys have just been awesome. I really do appreciate all your good comments and support. Thank you very much. And if there's anything that you would like to see in these videos, please let me know. If you'd like me to do a specific video on a specific subject, I'd be happy to do that. So just drop those in as a suggestion to me in a comment. Everyone, take care. We'll talk to you all bright and early Friday morning. Have a good one.